our second town hall. My name's Ethan Goodrich with the Goodrich team at Compass in Boston. And I'm joined by my special guest, Greg Giokas. Greg is a senior loan officer at RMS, Residential Mortage Services in Boston. He and I have known each other for almost 10 years, right, Greg?
Yeah.
Yeah, and I think we met at I know we met at a seminar where we were teaching a company how to do first-time home buyer programs, and years ago, and we bonded, and we've done a lot of business over the years together. So it's great to have you on, Greg. I'll let you kind of go into a little bit of your experience and just a little bit about yourself.
Thank you, Ethan. I appreciate that introduction. And your memory is definitely better than mine because I don't remember any of that, but I do remember that we've known each other for a number of years.
Yeah.
So I appreciate that. I wanted to just thank you for setting up this platform. And, I'm all about education and definitely educating our clients and just the people out there, especially in this time now in this environment. There's a lot of uncertainty, a lot of questions that people are asking, and hopefully we can answer some of those. Personally, I've been doing this for longer than I would like to admit, but 18 years. 2002 is when I got into the business. Right after 9/11 is when I graduated from college. So I kind of entered into a economy that was on the mend from all the things that had happened in 9/11. And then shortly thereafter, a few years later, then we had the 2008 financial collapse. So I kind of lived through that. And now we've got, this COVID-19 crisis, if you will, which every single aspect, every single one of those events, so to speak, that occurred were kind of isolated events. And we learned something from those that changed our industry, but they were very different in their own respects.
How was I guess the 2008-9 recession? How does it compare to this bear market or pandemic recession that we're in?
Right, great question. So I think in 2008 it was a very gradual recession. Things kind of happened, didn't happen as quickly as what we're experiencing now. It wasn't like an overnight situation where the unemployment rate had increased to such a large degree. I think it was a slow burn, so to speak, in terms of you were hearing a lot of these investment banks were not doing very well because of all the bad investments they made, particularly in the subprime industry.
Right.
And as they were shutting down, it was having a trickle-down effect on the economy, but it was over a year or 2 year span, right? And industry-wise, the big difference is that what happened in 2008, the financial collapse that happened in 2008, the housing market was impacted because of the mistakes that the mortgage industry had made, particularly in writing loans that were considered high risk.
Right.
This situation is something that is not our doing as a society, and certainly not the doing of the mortgage industry. It's something that it's an external force that came into our lives almost overnight and basically impacted or changed the entire economy, right? And the good news is that we learned a lot from 2008 in that the underwriting standards were very, very strong. We didn't expand our guidelines to write very risky loans. So we have that to kind of fall back on. However, because of the unemployment rate increasing to such a degree, there is, again, not because the loans that were written were risky loans, but these clients who are now losing their jobs or have lost their jobs or at least been furloughed, they legitimately can't make mortgage payments, at least for the short term. So they were kind of juggling that aspect of the industry at this point. So I would say that was kind of the biggest difference.
Yeah, I mean, it seems like there's way different challenges. It almost feels like the rug was like taken out beneath our feet, where we just all of a sudden slipped into this. And
Right.
I know that certainly in Compass in Boston, we were having a great start to the year. We have a lot of clients. We still have a lot of sellers that are waiting to put their properties on the market, and they're calling me every day. What's going on? When do you think this is going to be ready? When do you think we can go live with it? And buyers are super excited because you can speak to the rate a little bit more, but even before the crisis, it was already pretty low. Not historically low, but it was definitely driving a lot of mortgage application, refinance applications. I know I started my refinance process a couple of weeks into February, and the rates were ridiculous. So I feel like buyers were excited. They were ready to hit the spring market, and this happened. So now they're in this like waiting stage. Some of them are a little bit more apprehensive, but a lot of them are geared up and still calling and wondering about when these properties are going to start hitting the market, when there's going to be a little bit more inventory.
Right. Yeah, you're absolutely right. I think this is an opportunity for many buyers because the demand may have retracted a bit.
Mm-hmm.
So there's not as much competition, which I think is actually a good thing in some respects. So I've been telling a lot of my clients that, if they feel comfortable about their employment, they feel secure, and they feel comfortable about the idea of kind of investing in a new property, they should definitely go all out and be aggressive. And if there's something that's listed out there and it checks all their boxes, they have a very strong likelihood of getting that property. I'll give you two examples.
Yeah.
Two of my clients separately had made offers on homes almost about, I'd say about 2 or 3 weeks ago, and they lost out on both houses, right? And then fast forward 2 weeks later, for whatever reason, each of those buyers for those homes backed out of their deals, and they came back to my clients and they were able to get those properties actually at a cheaper price.
Even than they bid.
So it was even cheaper than what they originally bidded.
Yeah,
so It was a great opportunity for them, and it checked all their boxes, and they were super, super excited about it. In terms of interest rates, I think rates are going to stay for the foreseeable future. I think rates are going to stay low. So that's going to be a win for buyers and for sellers. I think the challenges that we're facing, and I'm sure is on the listing side of things. We're going to see a contraction on listings because a lot of sellers may not feel comfortable about listing their properties. Some sellers may just decide to list a property later on when there's more opportunity for open houses and more people could view their properties. So that will limit the amount of supply, but I think the demand will stay there. I think buyers are still excited and still prepared to purchase a property. I think they're just kind of waiting by the sidelines, so to speak, at this point. So that's a good thing. So I think the market's going to be fine moving forward. It's just a matter of the timing.
So in terms of like the products you can offer, is it the same now as before? Are you restricted? It seems like for most lenders, their day-to-day hasn't changed as much just because they are more virtual in nature anyways.
Right.
Are you restricted with the types of loans you can do? Can you do portfolio loans, or is it more pressure to not take on as much debt, or can you speak to that?
Right. I think the industry as a whole is feeling some pressure on taking on debt because there is some instability now in the mortgage industry in regards to the forbearance programs and the expectation of how many people are going to be losing their jobs or at least have been furloughed, and how many of those payments are going to be missed over the next 90 days. So that's kind of trickled into.
Can you explain forbearance to everyone, what that is?
Yes. So forbearance is a situation where you reach out to your servicer, the person that's collecting payments on your mortgage, and you have an agreement in place that basically states that they're going to allow you to not have to make payments for a certain number of months, right, until you're back on your feet.
Okay.
And those payments basically get added back to the principal of your loan, okay? And the idea, and you have to reach out to your servicer to kind of get the entire protocol to make sure that you qualify, and they may have some some criteria in order to enter the forbearance program. But
Okay.
the idea is to just kind of give some relief to the homeowner so that they don't get themselves into trouble. And but it doesn't necessarily mean that they're going to forgive those payments, because the payments are still
Right.
due. It's just that they're going to delay the payments and maybe just add it into the principal, and
Okay.
then start the payment plan again.
So would a 30-year mortgage become a 31-year if it was a
Right. They wouldn't add years to the mortgage. They
okay.
just add. They would just increase the principal by the amount of the mortgage payments that were missed.
Okay.
Right.
Okay.
But I want to urge everyone, because the government did come out and said that part of their relief bill was going to help banks with these forbearance programs. And they basically told everyone that they're going to get relief for the next 90 days, which is all true. However, each bank or servicer has different criteria for this forbearance program. So it's not as simple as just, you're not going to make mortgage payments for the next 90 days.
Stop making payments. Just hope.
Right. Correct. But hopefully it doesn't come back. Right. Exactly. You have to actually actively reach out to the servicer, have the conversation, discuss your hardship, and then they'll explain to you what the program entails. So that's what everyone should be doing. So anyway, so there's been a little bit of uncertainty in the mortgage industry because of that, which has translated to some changes in certain loan programs, particularly two loan programs, the FHA loan program on one end, and then jumbo loan programs on the other end. And I consider these fringe loan programs because they're your median loan programs, or the programs that are the programs that most homeowners are applying for, are those that are secured by Freddie Mac and Fannie Mae, right? That's, I don't know what the percentage is, but let's say that's about 75% of the loans that are underwritten in America. Then you have your fringe programs like your FHA, which is considered a little bit of a riskier loan program for first-time home buyers. They lend to people with maybe lower credit scores, lower down payments. And then on the other end of it, you have your jumbo loan programs, which are, higher priced homes, considered higher risk in that respect, because the prices of the homes are a lot more expensive, right? So those fringe programs have been adjusted accordingly. So what they've done is they've limited the criteria for credit scoring. For example, with FHA, you could have as low as a 580 credit score. Now, over the course of the last 4 or 5 days, they've increased that minimum criteria to 680. Okay, so it's quite a decent jump. Still good, but there's an adjustment to quality. It's basically what it's called.
They're trying to mitigate some of the risk with some of the low credit scores. So with jumbo programs, is there any backing by the government or by any institution?
There isn't.
Right now. Okay.
That's another reason why that program was adjusted, because that is not backed. It's not securitized by Fannie and Freddie Mac. It's strictly whatever the secondary market has an appetite for. And right now, although it's short term, there isn't much of an appetite. Meaning there's not a lot of investors that feel comfortable, buying and selling these types of mortgages. But I think that'll come around, because jumbo programs have been around forever. They're not going to go away. I think we're just kind of going through this period of time now where there's just a little bit of instability and uncertainty.
Well, certainly in Boston, it seems like most of the loans are jumbo. So what market factors right now, are the lenders looking at? Are they looking at like mortgage applications, unemployment, 10-year treasury, any of these? Like what is affecting them the most? Or, or is it kind of artificially low because the Fed has cut the interest rates down so much? What are the lenders following in terms of, or how are the rates determined right now?
Right. So I think rates primarily are determined at this particular juncture. I think the government has a lot to do with where rates are currently. They're definitely buying into the mortgage-backed securities market. They're a heavy buyer at this particular point, because they understand that low interest rates are going to help stabilize the housing market. And what lenders are looking at specifically right now are two different factors. One is early payment defaults, meaning people that are buying homes, and then from day one, they may have lost their job, or maybe their salary was cut back, and they're already having a difficulty with making their first mortgage payment.
Oh, wow.
So that's definitely on
Closings
their radar.
In the last
Closing
month.
happens,
Yeah.
and then a month later, people are already, jumping into a forbearance program or requiring a forbearance program. It's starting to happen a little bit more now. It's definitely not a phenomenon that the industry was aware of up until now, because no one's really, we've never really experienced such a spike in unemployment based on, the fact that everybody's at home for the most part, which again, I think all of this will correct itself, because we all know that a lot of the unemployment is temporary at this point, right? Once we're able to go back to work and things are opened up again, we expect that employment rate to drop drastically. But we are dealing with whatever we're dealing with. We just really don't know the amount of time that this is going to last for, right? So with that said, lenders or the industry as a whole is definitely looking at early payment defaults as one aspect. They're also looking at the unemployment rate is very important to them, right? Because that ties into payments. And then they're looking at how investors are purchasing these mortgage-backed securities. How is the market doing, right? So just to kind of backtrack, when I say mortgage-backed securities and investors, the way that the industry works is that when loans are underwritten, and someone purchases a property and takes out a mortgage, that mortgage gets packaged into a mortgage-backed security, right? And they usually get packaged in tens of millions of dollars, right? So your specific loan is part of an entire consortium of loans, right? And these loans get packaged and they're sold just like the stock is sold, like a stock in the stock market. And those are purchased and bought, and there's investors in the backdrop that are collecting payments and all that, right? And the servicers, the people that you make mortgage payments to, they're kind of an intermediary. They're a collector of the payments, right? They take a small percentage for being a collector, and then they pay the investor that owns that loan or that mortgage-backed security, right? So when I say that the market is unstable or there's not as much demand, I'm referring to those investors that are buying and selling these types of mortgages. Right now, for the short term, there isn't a very strong market for obvious reasons, right? Because there's a lot of uncertainty. So I think once that starts to open back up, then I think there's going to be a sigh of relief, right, with the lenders. And I think then you'll start to see some stabilization in loan programs and just everything in general in terms of how the process moves forward.
So are you turning down applications at this point, or are some banks doing it? Because I know that some of my clients that have purchased homes that are applying for refinances, some of the banks that they initially went to are like, hey, we had to wait. We have too many applications because of the rates, and you'd either have to check with a different lender or just wait a little bit, until things calm down and we can start processing more. What is,
right.
Is it for refinances or for new purchases or both?
Right. There was a time, I would say, this is outside of the whole situation that occurred with the coronavirus, but during that span when rates had dropped drastically, the industry, I think, took in about 1,000 times the amount of applications that they normally would take around this time. Not 1,000 times, 1,000%. So 10 times, right?
So
what they normally would get.
March, or in that 6-week window or whatever that was before.
What was your question? I'm sorry.
So in that time period was February 1st to March 1st, in that window somewhat.
Right.
Yeah. Okay.
Right. Pretty much. Right. When rates had dropped at their all-time low, everyone came in and tried to refinance. So there was an influx of applications that came into the industry. So outside of this whole virus situation, that basically created created like again, an influx of applications into the industry to the tune of 1,000 times what the industry would normally uh, have around
Yeah.
that time, right?
Yeah.
So that basically limited all the resources, basically all the lenders reached capacity. So there were a lot of lenders that either increased their interest rates artificially to curb the amount of volume that was coming in,
Yeah.
or they were basically, like you said, turning down business or letting people know that they couldn't refinance at this particular point. So then that happened. Then 2 weeks after that, this whole pandemic situation occurred, which limited resources even further, right? And that caused some further pressure with resources. So that impacted the amount of applications that could come in as well. And then now in terms of, for me personally, we haven't turned down any business, no. We've done a pretty decent job of kind of maintaining a pretty good process flow. The one thing that we did do is, instead of locking in interest rates with 30 to 45 days, and we're talking about refinances at this point, we basically mandated a 60-day rate lock on all transactions. Now, that doesn't necessarily mean that the refinances would take that long, but we're basically preparing ourselves for maybe, a longer process for that refinance, right? So that's kind of the extent of what happened with us in regards to refinancing. Now, in terms of the product changes, luckily, I haven't had any clients that have fallen into some of the changes that were made, both in FHA and jumbos. But there have been people out there, definitely with colleagues of mine at other banks and lenders, that have definitely turned down business. Unfortunately, they've had to withdraw files that were already in process, where people were actually amidst, buying the property.
Oh my God.
And for whatever reason, they had to pull that transaction. A big situation that we're dealing with now, even I am dealing with, is job loss.
Yeah.
So I'm letting everybody know.
So if, on a micro scale, if you're under agreement and, you get furloughed or lose your job, are you still continuing with the loan and allowing them to get into a forbearance program? Or is it something where you're like, this is, too risky right now?
Right.
It's a 30-year loan. You would
point.
imagine that, they'd get a job in the next 30 years. So
right. That's an excellent point. Outside of whatever I personally think about that situation, or even my company, the industry has basically mandated that if any client is refinancing and has applied and has been approved for a forbearance program, they're no longer eligible to refinance.
Okay.
So that's number one. Number two, if someone is in process and they lose their job or they're furloughed, they're no longer able to close until they've been either placed out of furlough or rehired, right?
Okay.
So that's definitely, there's no wavering from that. Now, what we can do is we can restructure some things. So let's say, for example, we were applying with two individuals, and maybe one individual lost their job or was furloughed, but the other individual is still actively working. We can restructure on the fly and apply everything through that one person versus both. So there's workarounds in some respects, or instead of just denying the file altogether, we may just delay the closing until things have settled. So there's some workarounds in that aspect.
What about a co-signer? Could you add
co-signers?
Yeah. Okay.
Yep, absolutely.
That would be a restructuring that,
that would be part of the restructuring. Yes. Yeah. So luckily it hasn't happened yet, but it's definitely out there as a possibility. So for any of you that are listening to this, that are in process or, considering making an offer on their home, definitely reach out to your lender, let them know where you currently stand, because there may be ways to restructure things beforehand to kind of just prepare yourself appropriately.
Yeah. So last week, I had my real estate coach, Steve Scholl, on, and, one of the things we're talking about is just as a seller, as an agent, one of the things I'm doing is doing some serious vetting on the buyers that are coming in that are, financing, and making sure that the lender is up to date in the last day or two on the job situation. Has their income or assets dropped to a point where they can't use them as collateral or as, for use for down payment? Are their stocks now relevant, to what they were using before? So That's a big thing. Are you checking in with your buyers consistently? Or are you kind of waiting till they're in the offer process? Are they, letting you know ahead of time that, I'm putting an offer in, am I still eligible for this loan?
Right.
How is that working? Or are you updating them and saying, hey, just so you know, that product that I said you were approved for before now is out of the question?
Right. So I'm doing a little bit of everything actually. So I'm definitely educating a lot of my clients, sending out some emails or any information that I have on things that are kind of transpiring in our industry. The big thing is obviously forbearance. I'm trying to educate people on forbearance programs,
Yep.
and letting them know that, before they reach out to their servicer, just understand, the impact of a forbearance program, and just having that conversation beforehand. So that's number one. Definitely reaching out to them about their job situation, and that's both clients that have been pre-approved but haven't actually found a house yet,
Yeah.
or clients that are currently in process. So I'm doing all of that because that's important. I'm glad you're doing that too,
Yeah.
Ethan, because there's not a lot of agents that are doing that, whether they're not privy to it, they're just not thinking about it, or they're hoping that they bury their head in the sand and, hopefully everything turns out okay.
Right.
But I think personally, I think you should be proactive about these things, because, there are workarounds, and there's ways to, there's potential to kind of take care of something before it turns into a bigger issue.
Right. Well, I mean, the big thing is right now is the person, in a bidding situation, which, a lot of the properties that are priced well, we'll get into, you want to pick the best buyer, and it might not be the best number. It might be
Right.
the most secure. It might be the one with the most cash down. It might be the one with the most collateral, or, it could be the one with the best flexible timeline, in terms of closing process. But, we have to double check, because the worst thing that could happen is you pick someone, then you go out of agreement, and, if it's a hot property and it's gone on off the market in the first week, you're susceptible to potential new offer 10% below, what you originally started at. So you want to make sure that, you're picking the best one to see it through all the way, as a seller's agent. And, we're also having that conversation with sellers ahead of time that, there's a lot of buyers out there that may try to pull a fast one on you and try to renegotiate right before closing. We've seen it happen in Boston. We've seen it happen throughout the country, in terms of, right before closing, they might say, I can't close on this without a 5% discount. And the seller is kind of left with an option of, do we go through a legal battle here? Do we go back to the market? Or do we accept this person that, we've already accepted and try to close with them? So it's a tough situation. Every seller is going to handle it differently, but we're trying to make sure we're picking the person that's going to close on it with the original terms, or as close to the original terms as possible.
That's an excellent point.
Yeah.
Excellent point.
So yeah, I think, some of the data that just came out, I want to share with you over the last couple of days. Well, it seems like the Dow had a good rally. The market had a good rally over the past few days, and we're up 50% from the lows of March, which is a good sign. Some of the interesting figures I've seen is according to Dow Jones, 69% of tenants paid their rent the first week of April, versus 82% paying their rent for the first week of March. And according to Related Group, which is over 60 billion in real estate assets worldwide, 88% of residential rents were paid the first week of April, 95% of commercial, and 26, this was the big number, 26% of retail rents were paid this first week. So, I'm wondering your thoughts on the commercial real estate market. I feel like, when this does come back, the commercial real estate market might feel at the worst of everyone, just because of apprehension with buyers, and with shoppers, and people still might not be ready to get out of their house and get into restaurants and stuff. What do you think? What do you think about that? The retail scene.
Yeah, no, I think you're spot on. I think the commercial sector, the commercial real estate market, is probably going to be the hardest hit from all of this, because we don't know how many businesses, small businesses, large businesses, are going to be impacted long term from from this pandemic and the fact that people have been home. The big thing is not only are businesses shut, we know that, but how much you just said, how much apprehension there'll be from people, once the kind of the floodgates are open, so to speak, and people are back out. What is that going to look like? What is our world going to look like, at least for the short term? Are people going to be apprehensive of going to the gym, about going out shopping, about going to sporting events, doing all the normal things that they were accustomed to, just a month ago? And I think all of that is going to have a direct impact on all these retailers, right? And, there's only so much money that they have that'll carry them through. And there's only so much money that the government can provide as a, financial backdrop or a safety net, so to speak. And we just don't know what those numbers are going to look like. Right. So I think that is a sector that I'm extremely worried about because there could be some really difficult times ahead for them. Going back to what I was saying, so in the residential world, I think people still need a place to live. So I think once we're kind of through with this furlough or the situation, I think that will bounce back relatively well. But in the commercial side, it's a different story for sure.
Yeah. Well, Greg, thank you so much for coming on this afternoon. I think if you're out there and you're looking for advice or looking for a good place to start, Greg is a great person to reach out to. And I can share Greg's contact information with this post. And Greg, if there's anything else you'd like to say, I'd love to hear your final thoughts. But it's always a pleasure talking to you, and you do such a great job for all my clients. And really, I think one of the big things that separates you is just the consultation and the advice that you give them. Whether you're the best choice for them or not, you're always a good place to go. So I always appreciate that.
I appreciate that very much, Ethan. Well, first off, I wanted to echo my sentiments, your sentiments as well, is that, Ethan, for all of you that are listening, is an extraordinary resource and a great real estate agent. Case in point, putting together something like this, he really cares about his clients and he cares about the educational piece and letting people know, what's happening in the marketplace and in the industry. So I really appreciate that very much, Ethan. Right. I also wanted to just kind of take a few minutes and, for all of you that have friends and family, or even you personally, first responders, all the healthcare providers out there that are going through extremely difficult times and helping us in today's crisis, I wanted to extend my thanks to all of you and let everybody know that, we are going through some uncertainty, some difficulty, some sacrifices in our own version of whatever that is. But it gives me great solace to know that we're all in it together, that it's not just, my problem or your problem. It's, right. It's a collective problem that the entire world is kind of facing. Yeah. So I think just like that, we'll get out of it. And I think we're going to be better people as a result of it. There's lessons to be learned from everything that's transpired, both good and bad. But either way, there is definitely a light at the end of the tunnel. I think we'll get there sooner than later.
Yeah, well said, Greg. My sentiments exactly. And again, I really appreciate you coming on, and hopefully we can have you back. Hopefully this will become a regular thing, and we can get back on when the market might be a little bit more active. Yes. But for everyone else listening, out there listening, thanks for tuning in. And I'll be on next week as well, next Friday. So stay tuned. And if you have any questions on follow-up for this, please reach out to me or my team, and we can make sure we're getting back to you. Or if you have any other questions you'd like to hear us answer live with any of our special guests, please email us. Thanks again.